Hello everyone, good afternoon. How are you doing? I hope you're doing fine. I miss this space. Alright, so I've just been quiet for some time. I just don't know why. I just felt like taking a break. But then I've been receiving messages that I should drop something, even though I don't feel like it, but I think I have to. And the reason behind that is because something happened recently when I was analyzing the chat and I went to sleep, and after that my eyes started to hurt me. Alright, so my eyes started to hurt me, and I think it's because of the screen time. Alright, I'm always on the chat all the time, 24/7. I'm always at home, so as I am at home, I'm always analyzing the chat. So I think that actually affected my eyes. And I got scared of it because it was very, very painful that night. I was enduring the pain for straight 3 hours. So the following day, I was like, I should take a break. And since then, I've been avoiding my screen. So that is, by the way. All right. So I want to talk about Euro USD. And from what I'm seeing, I noticed that most of us has been panicking based on the news going on concerning Donald Trump and the tariff and stuff, interest cut and stuff. Yeah. But I also do pay attention to that. But at the same time, I'm also looking at the charts to see what will happen. And nothing clear has been seen. And I have not yet seen Euro USD going bearish for this time being. And also, I noticed that the stock market was affected, but still the same thing. Never have I seen any structural shift of that. And if you guys can remember, Solana pained me a lot because of the news that happened. We almost hit the target. Like, we already hit the first one, and I was watching the price to go for the all-time high. And then that news happened, and then everything got messed up, including SUI. So that is painful. So news like that is always volatile when it comes to crypto. So I should go back to Euro USD and we'll be on the daily time frame. But let's first of all look at the higher time frame. If we pay attention to the monthly time frame, we have already seen that from this point, Euro range for some years. Then we finally trade lower to take the sell side. I've already explained all of this. Same thing happened right here. We ranged, and then sell side was taken. So we have the accumulation, manipulation, and then distribution to the upside. Now also, we also have in mind that we are inside a range high and low. We have this external range high and the external range low. These are the external points in which we are paying attention to. Price trades into the 50% of that range high and low, and we ranged in that level, and then we trade down to the discount of the range high and low, and then discount push the price higher, trading into premium. You can discover that when you use your Fibonacci to mark your high and your low. Right there, we actually see we hit discount of 23.6 Fibonacci level. Oh, sorry, I shouldn't have deleted that because I wanted to show you something. So we trade into 50%, even trade into 61.8, still equilibrium. Then we trade it down to the discount, and price push it higher into the premium of 79 Fibonacci level. Now, due to the fact that we are inside this range high and low, whatever is happening right here is a range. You can actually see down the monthly time frame that these candles right here, we are ranging. Now, since we still have buy stop resting on this high, I am seeing that range has a reaccumulation to go higher to take that external high. Due to the fact that we are having the 6 month time frame, and we already know that this is a range, right? We already taken the sell side, and I'm anticipating this to go for the buy side. But then I have these thoughts about the end of the year, and you know we have 4 quarters. All right, we have 4 quarters to happen for a year, which is one candle is 3 months, right? So let's do it like this. So the first 3 months of the year is the first quarter, the second 3 months of the year is the second quarter, the third 3 months of the year is the third quarter, and then the remaining one is the fourth quarter. So the first quarter is January, February, March. Second quarter is April, May, June. Third quarter is July, August, September. Then the last quarter, which is the fourth quarter, is October, November, and December. And we have this thing in mind that either the first quarter or the second quarter is likely to give us the high. Sorry, is likely to give us the low of the year. If we are expecting a massive bullish run, we are expecting the first or the second quarter to give us the low of the year, and then we'll be looking forward for the third or the fourth quarter to give us the high of the year. So if the third quarter gives us the high of the year, then it's likely that the fourth quarter will trade lower and then closes for the year, and we will now have a full bullish 12-month candle. Also, sometimes the last quarter trades lower and then continues to go higher and then closes, and you still have a full bullish 1 year candle. So these are the things that we pay attention to. In most cases, if the year has to range, all right, so either the third can even give you the high and the low of the year, or the first could give you the high, the third will give you the low, and then it closes as a range. And you can apply that in bearish movement for the year. Just like we have 2024, let's go back to 2024. This is 2024 right here, previous year. Now if I go down to the monthly time frame, let's see, this is 2023, and we trade down April, May, June, July, August, September. So in this case, we have September giving us the high of the year, which is the third quarter, right? Sorry, January, February, March, April, May, June, July, August, September. Yeah, that is the third quarter, and then the last quarter gave us the low of the year. All right, so if you also look closely from the first and second quarter of the year, market was ranging. All right, so when market range, it traded higher to take previous year's high right here, December, previous year high 2023. It took that previous year's high right here. Immediately we have that sweep of previous year high. We traded lower to be drawn to liquidity resting on the sell stops. So the third quarter gave us that high. So we have this accumulation, right? We have the manipulation to the upside, taking out the buy stop, and then we deliver to the downside. So we have accumulation from the first, second quarter, the third quarter trade higher, took out those liquidity, and then we trade lower, closing for the year. So we always have this in mind. We always pay attention to that accumulation, manipulation, distribution. So if you notice that the first, second quarter is accumulating, you're anticipating two things: either it expands it manipulates to the upside, or manipulates to the downside, and then it expands. All right. So that is a story. That is a lesson, different lesson on its own. Possibly you can learn that from MMXM trader. I think he's a popular trader. Yeah, I think he can explain that if you go through his videos. So we are now looking forward to this current year. You can actually see January maintained the low of this year. I will not expect the market for the year to just drop and drop and drop and drop and drop and drop and then come back to this low. It will not do that this year. That is what I'm anticipating. So I'm anticipating for January to maintain that low of the year, which is the first quarter. Let me go to the 3 months. Have January maintain that low. So we have the first quarter, we had the second quarter. We are currently on the third quarter and now the fourth quarter. If you look at the third quarter, you can actually see how it traded with just range. So we are now paying attention to see if that third quarter will maintain the high of the year, or the fourth quarter we trade upwards to take that high and then go for this buy stop. But then, based on the news going on, I think it could possibly just range. All right, so but I am not anticipating it to drop down below this 3-month low. I am not anticipating that. If that is to happen, we will see that on the weekly, daily time frame. So that is now where we are going to be dropping down to. We drop down to the weekly time frame. You actually see the weekly time frame starting from January. Now I want you to pay attention to what happened here. So when we traded lower for 2024 to take the sell stop resting on this low, this is the external low, right? You can actually see what happened right there. Price pushed it. It ranged on that low. We don't call this a structural break. All right. And then what happened? We have this range. Okay. So we trade. This is December, right? And then January opened, taking out what? Previous year's low. So when you took that out, it shifted, and then that is accumulation in a discount level. Remember, we drew our Fibonacci from this high to this low. You can actually see that it accumulated in a discount price level of the daily range, and then we impulsively trade higher and start giving us this weekly swing points, which is this low, this high, this low. We traded higher, and then we are now ranging. So this is a ranging market, and what are you looking for? Is that going to be an accumulation or distribution? For me, I'm seeing it as a reaccumulation of price for price to just trade high and go for this high. But I don't know if it will actually go for the high or we range till the year ended, to the year ends. But since this low is protected, I have not seen this to shift bearish. All right, so we are just ranging. Now we go down to the daily time frame, and you pay attention to the daily time frame. You actually see the bullish move right here. If I zoom out, you actually see that, right? High, low, and then we range. All right. Now the interesting thing that I am paying attention to is what happened right here. This is a sweep of previous month's low. So since we are on a daily range, we are on a ranging market, we are marking our daily range, previous month high and previous month low. We can now go down to lower time frames to see where price wants to go to. Now if you pay attention also, this is an external high and external low. We were dealing inside this range, right? Price trade higher, took out the external range high, and now we are looking forward to see if it wants to go to the external range low. It will go to that area if we see it violate an opposing trend. What do I mean by opposing trend? Violating a bullish trend. A bullish structure will lead to it shifting bearish to be drawn to the external low. If that is not seen, then we are not anticipating it to go to this low. Now also, if you take your Fibonacci from this high to this low, we are in a discount price level 38.20. I was trying to see if it will come down to this 23.6, but it did not do that. So why do I think it's not going to come back there? The reason is, if you pay attention to what happened right here, we have a sweep of previous range high, an old high. We swept that high, we traded lower, and we're looking forward for what is responsible to take this high. It is this area of demand that we have right here. So price trades into the demand zone, and we're anticipating it to continue going higher to be drawn to that high. But what did it do? We have a failure to go to that high. So this gave us a failed high right there. So we have a failed high, and then the next thing that happened was that we have a change of character right here. This is the violation of a low that was trading out of a demand zone, and then we finally have the violation of that demand, and we have a structural break right there. And then since that demand is now violated, we are looking for what is responsible to do that. We are looking for two things: the fair value gap and the order block responsible for that. And we can actually see that right here. We have this inefficiency rested right here, and this blue candle, the whole of this is that bearish order block. But to refine that, we are all focused on the fair value gap that was seen there, because if you look now, there is nowhere that the price is likely to buy from. Did you see any other area of inefficiency, any bullish inefficiency that price is likely to react from, to buy from? No. So the only thing that we see from price to go to balance is only from the sell side. So it's it's a good confluence to see it trade into that fair value gap and then sold off. We can take that trade from that area from the first week of October, right? That is Wednesday, 1st October 2024. Execute your trade, and you can just swing down to previous month's low. This is previous month low, September. Price trades into it. You can actually see what happened here again. When we took that previous month low, we were purging it. You can actually see it ranging right there. So it's now taking orders, accumulating orders right here. Now, the next thing that comes into my mind is that, all right, we have a breaker structure right here, and then we have it take previous month's low, right? So that means we're looking for the supply zone that was responsible to take that low so that we can take another short, and that is what we have right here. Now, price trades into it, it starts to sell, but the funny thing that happened right here is that we did not even see it go for this low, because we always, as a swing trader, we want it to go for that low. That would be our take profit, because in the idea we have this double bottom right there. But since I am seeing it giving us a failure to break this low, then I am not seeing EURUSD going bearish anymore. So I might be looking at this as a protected stop. So it's most likely to be a failed low. And since I am seeing that it did not break that low or give us a breaker structure, I am not going to be looking for sales anywhere here. Never will I do that. All right, I am not going to look for sale for the reason that we did not break any structure. There is no breaker structure. After we took that previous month low, we traded into the supply zone that was responsible for that, but we do not have a breaker structure. Since I do not see a breaker structure, I am not taking that short anymore. And the sell side was violated also. So I'm trying to say to stay safe, all right, and we not be taking any short. Now we'll go to the 4-hour time frame. If you look at the 4-hour time frame, are you seeing any lower lows and lower high right here from the 4-hour time frame to confirm that you're going to take a shot? From my own idea, I don't see any of that right there. Now from this point, when we have this double bottom, if you also look from here, we have this massive pull downwards. We trade higher to fill up that inefficiency, price trade into it, and then it sold off. That was when we traded into that previous low. We traded higher, we trade lower again, and we'll be looking to take a shot right here, because this is the most recent supply zone that took that previous month's low and gave us, I don't know why you call this a breaker structure, but I'll call that a breaker structure. Now price trades into it. You can take your shorts right there, it will lower, but we did not have a breaker structure. And the same thing is likely happening on the daily time frame, where we did not even break this structure. Now we finally violated this supply zone. What is responsible for that? We have this order block right here. And I know most of you will be looking like, we have a double bottom right here. Why would price respect that? I don't know. All right. There are most cases where you have double bottom, but price likely is going to respect that and then continue going higher. All right. And now when we traded into this demand zone, you can actually see how the market was trading. There was no area of inefficiency. It was filling up inefficiency. The sell was not too strong. It slowed down, traded into the inefficiency from the buy side and the down close candle. And if you were to have your confirmation entry, this is where you're going to have it. So from the daily time frame, if you want to be a swing trader, or yeah, we'll use the daily time frame. So if you analyze from the daily time frame, where you will be looking for your confirmation entry would be the 1 hour time frame. If you analyze from the weekly time frame and you're looking for your confirmation entry, it should be the 4 hour time frame. If you want the 4 hour time frame and you do analysis and you want to look for a confirmation entry, it should be the 30 minutes. And if you're on the 30 minutes, you're looking for confirmation entry, it should be on the 5 minutes. So you can also use other time frames, but these are the major time frames that we always use. So since we saw the clean structural stuff from the daily time frame, I'll be going down to the 1 hour time frame and we'll be analyzing to see that confirmation right there. Now, when price was trading into this area of inefficiency and the 4-hour demand zone, we have this swing point right here, which is this high and this low that traded into that area of supply, area of demand. Now, another traders looking to sell from here, price impulsively violated it. Price came back to fill up the inefficiency from the buy side and then start to shift trend. All right, started to shift. So we trade high, we trade low, we trade high, and now it's looking choppy. But everything is mostly clean and clear from the 4-hour time frame right here, right? So I am not going bearish for Euro USD yet. All right, we already know that is a range market based on the weekly time frame that we were analyzing from. Also, I forgot to mention something. If you're on the monthly time frame and you're looking for trade confirmation and entry, you'll be looking at the daily time frame. That's just how it is. So focused on the daily time frame, this is it. All right, so we already swept previous month low with September right here. We even swept August, 2 months, right? We swept 2 months low, but we are only focused on previous month's low. All right, it's not 2 months low. August rests here. This is July. All right, this is August. So it was just previous month low. All right, and then a liquidity from previous 2 months, just a sell stop, we swept right here. So that means the stop resting right here, we're buying that. And also the stop resting right here, we're buying that. So where should I likely be looking for a target? I'll be targeting this buy stop. Since we are having failure swing, we do not have a break or structure to the downside. So we're taking the high and we look forward to see it if we will go for the buy stop also right here. And now also due to the news going on and based on we are on this October stuff, I don't know if there will be any like massive trading going on, like enough liquidity that will be pushing the market massively like it was doing in previous months where the market opened the first and the second quarter. You can actually see that accumulation right there. So we are closing for the year and I think the market will slow down, just like how we have Asian, London, New York session. During the New York close, the market enters a consolidation and then closes for the day. So similar things, since it is a candle price delivery, the same thing should be happening on the yearly time frame. So yeah, I think that is how it's going to be. So let me look at previous year. So you can actually see when the year opened, you can actually see how the first quarter accumulated, range manipulated upside, and then we saw that massive drop. And when the year was closing, you actually see how it closed. All right, it's ranged. And when the year opened, we now see the massive movement that was happening. So most traders are likely to stop trading for the year, like they might possibly go on a break. So me on the other hand, I was also resting because I don't understand what is happening. Yeah, to be honest with you. So for me to not to be psychologically down with whatever is happening with the US, I have to, feel relaxed. Yeah, so that is it. That's what I have. If you notice that this week, if you are buying, you'll be taking out on break even. All right, because if you have a stop loss on this low, price actually take you out. Or if you have a stop loss on this low, price came down there, took you out. This is previous day's low, You can actually have a perfect trade here today. This is it right here. Let me on my indicator for London, New York. So this is previous day's low. Let me go to the daily time frame so that you can see that clearly. Actually, see it's previous day's low, and take this to previous day's high. Go down to the 1 hour time frame. See what we have: previous day's low, previous day's high. So this day today opened, and we see how it traded lower. Take out the previous day's low, trades higher. We came back towards another block right there. So if you are a day trader, you can be focusing on the 1 hour and the 15 minutes for your trade. You can also be using the 30 minutes. 1 hour, 30, 15 minutes. So if you look closely right here, when we swept previous day's low, the most recent high that we have is right here, which got violated, all right, after we took Asian high. London opened, took our previous day's low, and impulsively trade higher, breaking this high. So price came back to the older block responsible for that and filling up the basket inefficiency, and then we see it's rally upwards. Down to the 15 minutes, the same thing. This can be refined down to this last down close candle, and there we have the structural shift, all right, then price trades higher. So if you decide to be on the 5 minutes, then yeah, so this is the 5 minutes, this is the last bearish candle. We have two structural breaks right here because we have this change of character, and the break of microstructure because we have price. We already seen price was selling from this 5 minutes bearish order block, right? We trade into it, trade lower to get that previous day's low, and price impulsively, actually this will happen right here, impulsively trade high on London session, taking out this high. So we have a change of character and the market structural break. So price now came back down. We have this inducement right here. So price trade lower on market opened on New York, which is a retracement down to London. So we have what happened right here. We have this accumulation right here, we have the manipulation, we have the expansion right here, and then we have the retracement, and then we have the continuation to the upside. And that is how New York trades into the London, the main zone, filling up the buy side inefficiency and trading higher. And you know what we are to target? We are to target previous day's high. So let's see how this day is going to close, if it closes by taking previous day's high or not. So like I said, from the higher time frame, this market has been ranging, which is frustrating to me. All right, so yeah, that is all I have for EURUSD, and I'll be gone for a long time again. So see you guys next time. Take care. And wait, I have a swing trading course on Udemy that has been published last month. Possibly, yeah, last month it was published last month. So the description, on the description, you see a link to access the swing trading course on Udemy. So yeah, that is it, guys. So I've given you a brief explanation of swing trading, so you can possibly learn more from the course. Take care and be safe.